The public and private securities markets. The public markets have been easily accessible to a larger investor base. The private markets have always been slightly more difficult to access. The higher ticket sizes in private markets meant that only high net worth individuals or sophisticated institutions were able to access it. The private markets always have come with a certain amount of overheads for access, and they have practices that slightly differed from the public securities space, and hence issuers or fund managers have always struggled to manage the overheads. So a blockchain or DLT infrastructure does address these overheads to some extent, making these assets more accessible. While these assets are more accessible, doesn't mean that they are suitable for all clients. So client suitability still trumps accessibility. Blockchain and DLT definitely increases efficiency, so they are available to a larger cross-section of investors. But liquidity does not automatically appear just because more investors are buying. There has to be marketplaces. Public securities have stock exchanges where there is liquidity easily found. Private asset markets have not yet moved to a place where liquidity can be easily found. So that continues to be an area where there can be more improvements made. But regulations are coming and allowing for private exchanges to list digitized private assets, enabling investors access to these asset class within the client suitability norms. And hence, it is possible as this technology develops and interoperability between various public blockchains improves, it is possible to bring these assets onto the same infrastructure, again, subject to local and international regulations. The technology and infrastructure definitely make it easier for private securities to be basically made available and also traded in a compliant manner